Well, there's a bit of caution on the street. You have to admit. Good morning, welcome to the trade setup right here on Bloomberg Quinn Live. And I think it's an account of multiple pieces of news. First of them, the Fed Governor Brainerd said that the bank will shrink the balance sheet at a rapid pace. So that is, I think that term and the fact that the rate hike commentary was perceived to be a negative by the US markets leads to the bit of red on the screen that we have. The 10-year Treasury yield rose for a third day to 3-year highs, and oil has climbed on prospects of fresh Russia sanctions. So suddenly, from a Goldilocks picture, we are reminded that the world is a bit uncertain. So the US markets certainly came off in yesterday's trade for their markets, though I must say that the futures market is trading okay, but there's quite a bit of red for the US markets in yesterday's session. In fact, the dollar index has also started to show claw back, which is actually not a great sign, by the way. You have to keep in mind that while VIX has come off quite rapidly, DXY breaking into new highs certainly should not be considered a good sign. So there's a bit of an issue out there too. And I reckon that the SGX Nifty would be showing signs of that. Remember, we've had a bit of a pullback in trade. We had a bit of a pullback in trade yesterday as well. But for 2 days or 3 days on a trot, since Friday, we've been talking about how the risk reward doesn't look all that great for leverage longs, and quant indicators were indicating that maybe there's a pullback imminent. We had a bit of a pullback yesterday. There's a bit of a pullback again today. So yeah, the caution, warranting that caution finally turns out to be true, and not like it took 7-8 days. So, but for now, certainly the things don't look all that positive. So keep that at the back of your mind. Now, if you look at the trade yesterday too, I don't know if we can get the MOV function up, then great. Otherwise, we can go to the trade setup straight away, whichever way. But if you just look at what this, so look at this, right? The advanced decline ratio stayed positive. So the market breadth, remember, viewers, was still positive despite the fact that the Nifty came off yesterday. Will that change is the key question, because a lot of people on the HNI desk, on the retail desk, are leveraged long. And could that bring about a bit of an issue in trade today? That's the key thing that everybody needs to keep in mind. Fed minutes come out. We have an RBI meet this Friday. So all things put together, maybe, just maybe, a bit of a cautionary which is warranted. So the global mood will likely dominate. That's the trade setup really for the day. The global mood will likely dominate the opening hours in trade. What happens in the latter half of trade would maybe also depend a bit on how the futures market does there, how Europe opens and all of that. And of course, what the progression around the war news is, because that will also have an impact on what crude does, so on and so forth. So lots of ponderables out there. Banking saw some profit booking in trade yesterday, and led by banking, if the index were to correct, then the cushion for the Nifty is seen at about 17,700 and 17,800. Remember, the levels that I'm talking about is not for the bank Nifty, it's for the Nifty. The levels of support is about 17,700, 7,800. You got to keep in mind, I monitor if we show resilience at these levels and bounce back, or do we crack below those levels? Because if we do, then there are some more downside levels open up. I think the broader market breadth, as I said, is comforting for now, but it keeps the stock specific buoyancy in place. A bunch of stocks that we'll be talking about today. But yeah, keep in mind that, like I said earlier, that if indeed this were to unravel, and if there are some, how do I say, existing short positions, leverage positions, existing leverage long positions in specific counters start getting unraveled, then that could cause a bit of a problem. Flows were positive. FIs continued to buy 374 crores. So this is the 6th consecutive buy session from the FI side, which is great, augurs well for IT and banking, but that's a decent show for sure. What are the stocks, therefore, that one should monitor in this session today, keeping in mind that we're going to start our week? So some Q4 updates, naturally, so have to bring them to you. So Tata Steel, the deliveries growing by 16% QOQ to 15.2 lakh tons, which is the highest ever quarterly deliveries, is actually a comforting sign. Add to that the fact that steel prices the world over are looking robust. So certainly not bad news for Tata Steel. Watch out for commodity plays today. Marico, on expected lines, FMCG starting off on a soft note. I would reckon that some of the others too could have some chinks in the armor, but Marico indicated slowness. Revenue growth, low single digits. the volumes were marginally positive, they said. But Parachute coconut oil volumes were lower YOY. WAHO segment, this value-added hair oil segment, grew just low single digits in value terms. And gross margins, they say, will remain unchanged over last year, which is a bit of a comforting factor considering that input costs will largely go up. But keep in mind that for some of the other companies, the pressure on the input cost would be even higher than what it would be for Marico. The point being, the volume growth is just marginally positive. So there's a bit of an issue out there. You have to bear in mind that the same time last year, especially Q1, was impacted by COVID in India, the second wave, and therefore a YOY comparison and commentary for Q1 given by any of the FMCG companies will probably not hold as much water. So be mindful of that. Bandhan Bank, the Q4 business update. Again, financials are rock solid. This one, no different. The loan growth was strong. The EBC was back to pre-COVID levels. Collection efficiency, including the NPA customers for the month of March, stood at about 96% versus 93% in December. So it's gone up. I think it was some 80% about a year ago for Bandhan Bank. So collection efficiency certainly moving up. The loan book grew by about 16%. Banks deposits grew by 23%. CASA grew by 18.5 YOY to about 41.6%. But like I said yesterday, when it came to Federal, when it came to IndusInd, HDFC Bank, everybody's CASA numbers have looked really, really strong. So that shouldn't surprise people at all. Now, viewers, keep in mind, Bandhan Bank would be news for more reasons than one. I think there's some reportage about how Bandhan might buy stake in the IDFC mutual fund today ahead of IDFC's board meet. So one should watch out from that perspective as well. But the Q4 update has been strong, so there is no taking away that fact. Gufic, the companies received their DCGI approval for drug, which is an add-on therapy for the treatment of moderate to severe COVID-19 patients. Watch out for that. Watch out for Adani Green and Adani Enterprises, and I think Adani Transmission as well. One of the, but I am sure about these two. So they're going to consider raising funds on April 8th, which is about 2 days from now, by way of rights issue and or preferential allotment, including a QIP. Now we know why some of the Adani Group stocks have been on a roll. Well, if there is a QIP and if the QIP were to happen at a price which is higher, some people would be speculating on that. And that's why the stocks have done what they've done. It's been a remarkable move in the last 1 month for the Adani Group stocks. Yesterday was no different. Adani Ports as well was up about 4% on some rumors of how Total might buy. WhatsApp rumors of Total might buy a stake in the company. But so these Adani Group stocks are on a tear, really. And good going. Will they stop? Who knows? I don't think the best of the minds in the industry know what to do with an Adani Group stock. So you got to keep in mind that one has to be mindful when you're trading in these names. So that is one more thing. There are some viewer queries. We'll try and answer those. Just hang on for a moment. Let me just finish with the list of stocks in news. TVS Motors. GOBP and TVS will collaborate to create a public EV charging infrastructure for EVs. I don't think this is a more an enabler, and I don't know how much of a business momentum does it bring. But the fact that they have tied up with GOBP should augur well for TVS Motors. Maybe just maybe the stock shows a reaction. I don't know. If it does, you know why it is react. Some stocks are moved into the ASM short-term ASM framework, and those include an SML Isuzu, Centrum Capital, and Himadri Speciality, which had a near vertical move in Monday's session before rightly cooling off, and now it's moved into the short-term ASM framework. So therefore, that should be another reason for there to be caution on that stock, as well as SML Isuzu and Centrum. And some stocks in focus, like I said, Adani Enterprises, purely by virtue of the move that they have made. Titan, they likely come out with their quarterly updates today post market hours. And remember that their commentary post earnings in Q3 and post the con call were extremely buoyant about Q4. So it'll be interesting to see how strong a commentary it is from Titan. Tata Power was up about 8% yesterday. All the power stocks went up. Tata Power, Adani Power, Torrent Power, you name it, power name, NTPC, all of these were up and about. But Tata Power in particular, a rollicking move, strong additions on the FNO side as well as on the cash side, some delivery-based buying. So it's something that people should keep a keen eye out for. And Chennai Petro, there may be some news around the corner for Tata Power. Who knows? By the way, Adani Power got some discom dues, 3,000 crores from Rajasthan discoms as dues, as arrears, having repaid 3,000 crores repaid to Adani Power. So, which is why that keeps that stock in focus. Yes, but it shows that if there are positive stuff happening for Adani Power, there is no reason why Tata Power's Mundra issue cannot get resolved. What if they get some investments in the InvIT? Lots of news flow surrounding that stock. Be careful, but yeah, watch out for that one. And watch out for Chennai Petro. Yesterday, both MRPL and Chennai Petro, by virtue of maybe the kind of valuations that they're trading at, did really well. Remember on MRPL a few days back, we had gotten you the Motilal Oswal note wherein they had spoken about how there could be some upsides. So both the Chennai Petro MRPL did well. So those remain as stocks in focus. Last but not the least, before we wrap up, viewers, there's a lot of talk around what to do with HDFC Bank. Now, will the trigger out here, viewers, is that you want to think of it that whether you are a long-term investor or short-term trader. And if you're a short-term trader, you've got a lot of fair degree of money if you're able to climb in at a good opportune time. Maybe you want to take some chips off the table. For a long-term investor, I think there are a couple of triggers at play out here, both for HDFC and HDFC Bank. Remember, HDFC on an arbitrage basis because of the time value, 18 months to the merger. So because of the time value, trades at a bit of a discount to HDFC Bank currently as per the ratio. But the key is, would MSCI allow the combined entity as a part of those indices? And what kind of passive flows does that generate? Somebody was telling me that it could generate massive buying into HDFC Bank. Even if there is some sound bites around it. And if it doesn't happen now, it could happen at some point of time later. Frankly, if you're a trader, sure, by all means, you could think of booking the money. But if you're an investor, this makes it a behemoth to reckon with. I think Ira has written beautifully on our website, but I'm sure there are a bunch of other. I'm not recommending that you should come only to the Bloomberg website. Yes, I think we've done good stuff there, but a bunch of other places are actually talking about what this combined entity could do. And I hear good things, or I read good things on interviews and in reports. So if you're an investor, just looking at the Q4 update of HDFC should give you confidence that there is some growth ahead. Valuations may come off a little bit because market valuations may come off, but otherwise things don't look all that bad. I'm not making a recommendation by any stretch of imagination. I'm just saying that based on the reports, it could be an interesting play to look at. Please do consult your financial advisor. I'm not qualified to give you a recommendation one way or the other. But yeah, if simple logic, if you're trading, then maybe trading profit should be booked. Nonetheless, be that as it may, just a quick thank you for tuning in today. Be careful, be mindful of the fact that globally the situation is slightly different than the last few days of Goldilocks, and there is Fed minutes to be released, an RBI meet happening very soon, and all of these could weigh on stock sentiment in the very near term. Thanks so much for tuning in. If you're stepping out, please stay masked up, stay safe.